Hey everybody, I am super excited about today's topic. We are looking at how you can supercharge your 401k plan to improve your returns and grow money faster so that you can achieve financial freedom sooner so you can enjoy it longer.
Mm-hmm. So, huddle up, team. We are John and Tara Thorman, your money coaches for entrepreneurs, small business owners, the self employed, and everyone who wants to be one.
That's right. So these are three powerful and unconventional ideas and strategies that you can employ to build your wealth faster using your 401k plan. All right. Now, here's what we know. Most people, this is you. You're earning an income.
Right.
From that income, you're contributing to your 401k plan, and maybe you'll get a employer match, which is awesome. But then that's all that's happening.
Yeah,
like the flow stops, right? The velocity of money stops. Okay. Mm-hmm. And what we're going to look at are three powerful strategies, three secrets that you can use to change the game and get your money working harder for you in more ways to accumulate wealth faster. And man, trust me, number three is my favorite. I'm going to deep dive into this thing, and it's going to blow your mind. So don't miss it. Stick around.
Okay. So let's get started. Number one, our 401k rollovers. There's two types. Most of you know the first one. Not so much the second type.
That's right. So the first type of 401k rollover is when you change jobs. You move from one employer to another, and your 401k stays at your old employer. Now, here's an opportunity for you to get control of that asset and make it work harder for you, okay? You do not want to leave the 401k with your old employer most of the time. There may be some situations, but you really have two options here. One, roll the 401k into another 401k. Or two, roll the 401k into your IRA. But you want to do this strategically. You want to get more control of that money, and you want to have better investment options that can produce higher rates of return, and you want to have lower fees so that you keep more of the money.
Right.
Okay? But here's what most people don't know is possible. This is called an in-service distribution. Now, it's really available to people that are 59 and a half and older, but it lets them roll their 401k over while they're still working their job and contributing to their existing 401k plan.
Wow.
It's super powerful. So it's going to give you the ability to do better retirement income planning sooner, right? You don't have to wait until you retire. You can start on it earlier and get your money, again, working harder, earning higher rates of return with lower fees so you can keep more of it. But there's a whole universe of investment opportunities out there for your 401k plan that you probably don't know about. And so by using this in-service distribution, you can totally take advantage of that. Again, check with your plan provider, go to HR, see what the rules are, but most plans will allow for this, the in-service distribution at age 59 and a half. And again, man, take advantage of every opportunity you can. You're not stuck in that old boring 401k plan.
Right.
Okay?
And number two, have you ever heard of a self-directed 401k or IRA?
Yeah, great segue, because you could do the in-service distribution and put it into a self-directed plan. Now, these you've probably never heard about before because Wall Street can't and won't let you know about it, right? They want to earn all the fees on your money. But there are specific custodians who will establish a self-directed 401k, self-directed IRA. It gives you the opportunity to invest your money in a whole new universe of opportunities, right? Like we're talking, you could invest in your friend's business, you can invest in real estate, you can invest in gold or silver, you could trade options, you could, commodities. I mean, it's just, there's all kinds of opportunities. So don't neglect that. For sure, check that out. And this is important, and a lot of people don't know this either, is that you can have more than one 401k, right? So, I mean, if you have a W-2 job and you have a 401k there, well, if you have a side hustle or a home business, you can have a 401k there too, right? I mean, there's going to be maximum annual contribution limits and stuff, but you can have multiple 401ks, and there's opportunities for you to put more money into them than you think, especially if you have your own business and a self-directed IRA. Okay? Anything else?
No, very good.
Okay, actually, I forgot one thing. I want to encourage you to look at a Roth 401k. If you're not aware, you can have a 401k that's a Roth, but now with the new tax law changes, your employer can contribute to that Roth as well. You'll just pay the tax on the income portion of that contribution. Okay, it's not going to be a lot of money. You don't need to worry about it, but it's super powerful for you to get as much money into a tax-free account forever as possible. So look at the Roth as a solution there. Okay. All right.
Your favorite.
My favorite. Here it is. This is seriously how you can supercharge your 401k and put the principle of the velocity of money to work for you. And the idea is that you keep your money working for you. You don't want it going somewhere and dying, right? Going somewhere and stalling out and have like this dead equity, okay? Now this strategy, I recently learned about listening to an audiobook, okay, from Mark Kohler, who's a tax attorney and a CPA and an entrepreneur. So the guy has got a handle on this, and it blew my mind that I'd never heard about it before. So I'm super excited to share it with you. Now, the idea here with this strategy is that you take money from your 401k and are able to put it into multiple asset classes and then multiply that out again, okay? So here's how it works. What we're going to do is we're going to take a 401k loan, all right? And virtually all 401k plans have this availability where you can borrow money. I'm not talking hardship withdrawals. That's something totally separate. This is you're allowed to take out a 401k loan. Now, the plan, they generally provide for you to pay that back in 5 years with interest. And so that's kind of how we're going to look at this. But the interest you pay is not exorbitant, but the interest is you're paying it to yourself. Okay? So it's a way around the maximum 401k contribution limits. It lets you put more money in the plan because the interest is you're paying yourself the interest. So that's kind of interesting. But here's the big takeaway. We want to borrow the money and do it in a 1-year repayment schedule. Okay? We don't want you borrowing too much money so that it would be difficult if your employment situation changed, that we want that loan to be repaid. Because if you can't repay the loan when you change jobs, right, or change employers more specifically, then any 401k loan that's out there gets treated as a distribution and you're taxed on it. So we don't want to have that, situation necessarily happening to you. So we want to do just annual loans and you can pay it back in a year, okay? And the rules, the IRS rules, are that you can borrow up to 50% of your vested balance in the 401k to a maximum of $50,000. So there's access to a lot of money here if we do this right. And if your cash flow will support a big, monthly payment, you could borrow 50 grand a year and repay it and start doing some other things with it outside of your old boring 401k with very limited, terrible mutual funds and high fees. Can you tell I'm not maybe the biggest fan of 401ks? Okay, but anyways, you get the loan, and what are you going to do with it? Here's what you're going to do with it. You're going to take that loan, and you are going to go get an index universal life insurance policy. Now, hold on. Don't, delete or go somewhere else just because I said insurance. This is specific and powerful. It's a powerful tool to let you multiply your money, okay? And the difference here is that these are intentionally designed to minimize the insurance amount, so we minimize our insurance costs while we maximize the amount of cash that you can stuff inside of this thing and have compound over time. Now, the government sets limits on this because these policies are so great. So there's going to be a limit. The government says you can only put so much money in. And so you design them on purpose to do this. So it's like buying term insurance inside this policy and then max funding it so that you get the investment inside the policy. And you're allowed then to grow money tax deferred and access it anytime you want, tax exempt, for any purpose you want, tax exempt. All right. So this is a really big deal. Are you with me? Okay. So now we're taking the 401k loan and we're making our annual premium payments into our index universal life insurance contract. Okay. And there's 3 very powerful benefits you get by doing this. And they are
leverage.
Number 1 is leverage, baby. And just go with me really quick, because if you have $1 in your 401k plan, that equates to $1 of benefits to you or to your family, right? That's it. It can't provide more than that. But inside of your insurance contract, $1 worth of benefits could be worth $1,000 of benefits, okay? Because the leverage of insurance. So you get living benefits. That means if you have a heart attack or a stroke or cancer and you can't work, you can access the insurance benefits to live on to replace your income. So you can actually be the beneficiary of your own policy while you're alive. Huge leverage. And if you never need that, then the insurance benefit is there to pay out at your death to your beneficiaries. Super powerful, super leverage, okay? But again, we're taking the money and we're putting it outside the 401k plan so we can do other things with it. Number two, access the savings from inside your insurance policy through a loan provision in the insurance contract. Okay, so yeah, we got a loan from the 401k. We're going to buy an IUL. The IUL has got a loan provision, so we're going to borrow that money out, and now we're going to start investing it. And this is super powerful, okay? Now, I'm going to try to set this up and show you without getting too terribly complicated. So before, all we had was you earning income and contributing to your 401k, right? Well, now we're going to take out a 401k loan every year.
Okay.
And you're going to get that money and you're going to put it into an IUL policy that allows you to stuff it full of cash. You're going to save as much money as the government will let you in this thing, okay? Then you're going to take out a policy loan, and with those proceeds, you're going to invest it to buy other assets. Now, this policy loan provision, again, tremendous leverage because you could get that loan at 0% interest. There's participating loan options which give you the opportunity for positive arbitrage. And what that means is you could borrow the money at 3%, but keep it invested earning 6%. So now you're getting paid to borrow the money, right? You're getting paid to borrow the money, and that's good. But then the money that you borrow, you can work to buy other assets to earn even more money that can kick off tons of cash flow, which can repay the 401k loan for you. Okay? So you're growing assets every year, and you're also growing cash flow every year. Now, what I want to go over really quick is using the policy loan to trade options, okay? And trading options, again, trading options is a whole nother strategy that most people have no concept about. They have no idea how good this is. And I want to introduce you to it because I think you could use this to radically change your financial future, especially if you're behind on your retirement goals or you're not saving enough money. This is the way you can catch up. Trading options gives you a couple of benefits here that are significant. One, you get leverage. You can control like 10 times the number of shares for the same amount of money, okay? But it also serves as insurance. You're insuring your investment so that if the market goes down, you don't lose money. What a great concept, right? So trading options is super powerful. And really, it's the only instrument that I'm aware of that lets you make money if the market goes up, or if the market goes down, or if the market goes sideways. There's no other financial instrument that I'm aware of that'll let you do that. So, man, you got to learn how to do this, okay? And I'm committing myself to learn how to do this year. I'm just recently learning about this stuff. Like, it's unbelievable. In the meantime, before you start pulling a policy loan out to invest in trading options, what are you going to do? You're going to learn how to do it for free. That's right. You want to do paper trading, and there's several online brokerages where you can get an account for no money and start paper trading. It's kind of like a jet pilot going to a simulator to learn how to fly a new airplane. You're going to take this free paper trading account, and it'll be your simulator so you can learn how to start trading options, okay? But you don't need very much money to start trading options and start generating cash flow. You can start making money. And we want to encourage you to make small trades to start making money, and start out free and then start out with small trades and low money. And then you can just keep going and growing as you gain experience and you gain confidence. But the trading options is powerful. I mean, instead of having 5, 6, or 7% a year returns, you could get 5, 6, or 7% a month returns or more. Crazy, okay? So we've got to take advantage of this. So take several months, learn how to trade options while your policy is seasoning, okay? And then when you're ready, you can take a policy loan and start trading options, growing that account, growing that asset. And you got to decide then that the cash flow, the money that you make by trading options, you want to reinvest it into buy more options, or you can use it then to pay off the original 401k loan. And as this grows, pretty soon you won't be making the loan on the 401k anymore. All the income from trading options is going to be paying that 401k loan for you. And then you keep doing this, right? It's like repay the loan, borrow another 12 months, put it in the IUL, borrow some of that out, start trading more and more options, and then more cash is going back to pay the loan. The other thing you can do is then diversify and say, let me get into another asset class. Maybe you love the idea of rental real estate. Well, you can add that at some point then too. Take some of the money from a policy loan and invest it into some rental real estate, put 20% down and borrow 80%, more leverage. Another asset class allows you to generate more cash flow to pay off the loan faster or to reinvest. Velocity of money, right? Velocity of money. What can you do to keep this money circulating, right? And doing that's way more than this, right? Oh my gosh. Guys, super powerful concepts here. And you can do this. I mean, that's what's so exciting. So just think about it. After 2 to 5 years of, borrowing from your 401k, getting a loan, repaying it, and investing it in a policy, borrowing from the policy, investing it in other assets that generate cash flow, man, you're going to be in a great position to really snowball, to really compound this thing and put yourself in a position to retire much earlier, or at least give you the financial freedom you want so you can do way more things.
Right.
Okay? So repay and repeat this process every year with a brand new 401k loan until you achieve financial freedom. Did that just blow your mind? Man, I sure hope so, because when I saw this, it blew mine. It's like, this is so powerful. What a crazy good opportunity for so many people that are just bored out of their brain with their 401k and really not making the kind of returns that they need or that they'd like to.
Right.
This could fix it. Okay?
Very
Okay.
good.
Guys, we'd love to hear your comments on this. I mean, drop them below. You can ask some questions, but please crush that like button. Okay, share this and encourage other people to watch. Be sure to subscribe if you haven't already. We don't want you to miss another video like this. I mean, this is kind of stuff that can change your life.
That's right.
But guys, money and wealth are team sports, right? So we would love to have you join our team here and play to win your money game. That's all for now. See you on the next video.